when we make any investment, it obviously comes with its risks, whether it is passive funds or active funds. And within that, if it is an investment in equities as an asset class, well, then we all know that it always comes with a risk involved. Slight different aspect of the risks in active funds versus passive funds would be that in active funds, you are taking a risk of a selection bias in terms of selecting which particular fund where you will invest your money, and that is driven by many factors which include the fund manager longevity, the processes which the fund house or the investment team follows, whether they are following a robust investment framework or they are following an individualistic approach. So based on those few selection parameters, you might select a particular actively managed funds, and then it comes with its own human bias in terms of the portfolio manager and the analyst team selecting sectors and stocks. Whereas on the other side, the risks involved in passive funds eliminate some of these aspects of risks like human bias, etc. But it does come with the overall total market risk. Like we spoke in the beginning, that there will have to always be some risk involved in equities, so that total market risk will continue to remain in the passive fund as well, but it will take away the element of human bias and it will give a risk and return in line with the particular index that the fund is tracking. Say for example Nifty 50. So whatever the risk as well as return profile, suppose if the Nifty 50 is falling, then this particular passively managed fund that you have selected will also fall, but it will fall exactly and very much similar in line with the fall of the Nifty 50, whereas your actively managed funds might fall little bit lesser, or it might even fall little bit higher than the Nifty's fall. So that is the key difference between the risks involved in active funds and passive funds. To summarize, both come with the same level of total market risk, but in passive funds you don't have the additional layer of risks which come with human bias or fund manager longevity or changes in team structure, etc.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.